We are live, y'all. 50-year mortgage. Is that a smart solution or is that a lifetime debt trap, y'all? Man, I can't believe it's Saturday night, November 8th, 9 p.m., and I'm here talking mortgages with you guys, but I could not wait until Monday's show to let this go. President Donald Trump and the Trump administration just announced today that they are working on a 50-year mortgage. And, I have a lot of mixed reviews behind this. So we're going to break this down. But first of all, if you're new here, welcome to the channel. Type first time in chat if you are new here. Make sure you guys subscribe, hit the bell for notifications, and share this with 10 people, man. You're going to learn some shit today, right? Shout out to all my people that's watching this live on other platforms like Instagram and Facebook and LinkedIn. So shout out to everybody. And make sure you guys also download Rants and Gems on all podcast audio outlets. Okay. Leave a 5-star review too. So, all right, let's get into this, man. Let's get into this. We got a lot of people watching this live right now. So shout out to all of y'all tapping in on this Saturday night. So I'm gonna share my screen right now. Let's go to the tweet, or what he got his own Truth Social, the whole 9 yards. So let's go to that. So you guys, just in case you didn't see this or not, I want you guys to look at this right here. My man said, great American presidents. Great American presidents. Right? President Roosevelt with the 30-year mortgage, and now President Trump with the 50-year mortgage. This was posted today on an official account from Donald Trump, President Donald Trump, at 1:10 p.m. November 8th. You guys see that right there, right? You see it right there. So we ain't making this up, right? This is not just somebody just talking. Our president posted this with this poster here, this flyer, whatever you want to call it. Now, first of all, Trump be on a run. I've never seen a president that just be on Twitter and now Truth Social and just making breaking news about everybody's lives on social media before things are actually official. But hey, this is the world we live in. Type in chat, first of all, before we get into numbers and everything like that. Do you guys like the idea of a 50-year mortgage? Let me know your opinions in the chat right now. Do you like the idea of a 50-year mortgage? Now, I'm going to tell you before we get into the numbers and everything like that, shout out to all the first timers. And I've said this before, and I'll say it again. And this is just me, y'all. This is just me, because for me, when I came into the industry, you can do 40-year mortgages. You can do, I don't know if they had 50-year mortgages back in the wild cowboy days. And just for those of you who don't know, I've been in the mortgage business since 2003. What year is this? 2025. So what's that? 22 years I have been in the mortgage business. I call it the wild cowboy days, where you had all crazy products, right? Everybody was offering it. Fannie Mae, Freddie Mac, FHA. It was all types of subprime loans. It was everything out there. It was the wild, wild west, right? And they had 40-year mortgages, right? Interest only. I mean, the whole 9 yards. Back in the day, it was normal to get a 40-year. Just keep it real. A lot of people got 40 years. You had adjustable rates were heavy, 228s, 327s. Those of you, if you know what I'm talking about, right? So for me, my personal opinion, and I'm just telling you for me, if it was an investment property or something like that, man, throw a 50-year mortgage on there, because I want as much cash flow as possible, because I am disciplined enough to know, number one, I am going to pay down my principal balance at my leisure, number one. And number two, I know if rates get lowered, I'm going to refinance, and I know I'm never going to stay in a 50-year mortgage. Hell, I'm never going to stay in a 30-year mortgage. right? So for me, if I was buying an investment and the numbers made both sense and sense, then I would consider it. But key word, it has to make both sense and sense, ladies and gentlemen. It has to make both sense and sense. So for me, I don't know about you. For me, I would consider it. Hell, 50 year, 60 year, slap it on there. Let me see. Pause. Let me see what the numbers are looking like. Now, obviously, most of you, and especially as I've been watching this trend all day long, and I'm looking at Twitter and I'm looking at trends and threads, and I'm seeing the trending topic this and I'm seeing what people are saying. And this is why I'm asking you guys to state your opinion in the comments, because I'm gonna go through these comments later and probably respond to a few of them. But a lot of y'all hate this because you have the mindset of that you're going to be in this loan for 50 years. Right. So me personally, I wouldn't be opposed to this for an investment property if the numbers made both sense and sense. But a lot of you seem very emotional about this and are looking at this as I'm going to pay quadruple for my house if I go with a 50-year mortgage. And hell, absolutely. If you stay in that 50-year mortgage for 50 years, you are going to pay an arm and a leg. Now let's do some numbers. Let's do some numbers, right? So I pulled up this quick little calculation. Type screen and chat if you can see my screen. Type screen and chat if you can see my screen. Type screen and chat if you can see my screen loud and clear. So I'm looking at this and let me see how this looks on my YouTube. Let me go on my phone real quick, y'all. Make sure y'all subscribe to Rants and Gems on all podcast audio outlets. Download us today, y'all. Okay, so on YouTube, it looks good to me. So this is the best it's going to get. You can do this on yourself, right? You can simply get a loan amortization chart, right? And if you can't see it on Instagram, just go over to my YouTube channel. You'll probably be able to see it better on my YouTube channel. Okay, so I'm putting in simple calculations here, right? If you're on Instagram, you need to go to my YouTube and you'll see it much better. Okay. Comment YouTube in my Instagram comments or just search MG the Mortgage Guy. Okay. And this is all the Zoom is going to get. All right. So if you're comparing a $400,000, you know what? Let me do this. Let me see if this helps you. Let me see if that helps you. Okay. If you're comparing a $400,000 mortgage, a 30-year term versus a 50-year term, let's just say your interest rate is a 6.5%, right? And a 50-year term, I'm going to use is 3/8 of a point higher at 6.875. Okay. You're looking at a principal and interest payment of $25.28 on a 30-year mortgage versus a $23.69 payment on a 50-year mortgage. Type in chat, y'all. What's the savings between 30-year and 50-year on a monthly basis on this $400,000 loan example? Type in chat. Type in chat. Type in chat. What is the difference that you're saving on a monthly basis? Type in chat, y'all. Let's see. Grab your calculators real quick. And what is the difference between that 25.28 payment and that 23.69 payment? Type it in chat. Let's see. Some of y'all typing all types of crazy numbers. I don't understand how y'all getting these numbers wrong. Like, I don't understand how y'all getting this wrong with a calculator, yo. Right? Goodness. What is going on? Yo. All right. So you're looking at a difference of $159 in savings to extend your loan out for 20 more years. So you're saving $159 monthly to extend for an additional 20 years. Now, as I said earlier, this doesn't mean you are going to stay in the mortgage for 50 years. You can refinance at any given point in time. You can pay down on your principal balance. So my question to you, ladies and gentlemen, as home buyers, do you think this makes both sense and sense to take the risk of extending your term out an additional 20 years just to save $159 a month on this example of a $400,000 loan? Type your thoughts in chat. We got a lot of no's. A lot of no's. An awful lot of no's. Now, Chris Brown UAE says $159. And I'm glad you did that math because I was about to do that math for y'all too. Because we gotta make sure we're doing all the math here. The math has to be mathing. The path is math, ladies and gentlemen. The path is math. So let me find your comment. Okay, there you go. Boom, it's on the screen. You said $159 times 240, which is 20 years, equals you will save $38,160 for that additional 20 years. Now, now, interest or your total cost of principal interest, if you stayed in a 30-year mortgage, is $910,000 that you will wind up paying for this house with principal and interest payments over 30 years. Now, with 50 years, if you did not pay, and now mind you, these numbers are is if you made no additional principal payments at all, no refinances at all. If you did a 50-year term and you stayed in this 50-year term for the life of that term, you're gonna wind up spending $1,421,130,000 on your $400,000 mortgage. So you're gonna spend, so you're saving that 20 years. You're gonna spend another $500,000 in total cost just to save yourself $38,000 over that same time frame. I mean, look at this. The path is always math. The path is always math. This 50-year, to me personally, if I was buying a primary residence and I'm looking to live in there, if I was somebody who was in the home buyer market, I'm a first time home buyer, I want to get into a house, I want things to be more affordable, I want all of this, right? Am I going to put myself in this type of financial ruin for a house? Guys, Is this a smart solution to you or lifetime debt trap? Type it in chat. If you think this is a smart solution, type smart solution. If you think this is lifetime debt trap, type it in chat. Let me hear your opinion. Because now, again, total cost is principal and interest, not just interest, but this is your total cost because you got to add up the principal and the interest over that time. You're borrowing for a $400,000 home. So if you think this is a smart decision, a smart solution, type it in chat. If you think this is a lifetime debt trap, type it in chat. Not a death trap, debt. DEBT. You might as well say death trap. Look, again, if you think this is a smart solution, go for it. If you think, if now mind you, this is not into law, right? Let me say this right now because I want people to fully understand what the hell's happening here. This, you can't go get a 50-year mortgage today. Currently today, for QM loans, let me give you some guys some education here so we all on the same playing field. Okay. Currently, you're looking at 30-year mortgages are the only mortgages that you can do for the maximum term you can do for what's considered a QM mortgage. Okay. That means qualified mortgage. Everybody type in chat QM. That means qualified mortgage. So after the Great Recession, Congress passed the Dodd-Frank Wall Street Consumer Protection Act, which made mortgage underwriting in the mortgage industry in general stricter. From the fact that people had to get licensed like myself, either certain products you couldn't do no more, like interest only you can't do on conventional Fannie Mae, Freddie Mac, FHA loans, VA loans, you can't do interest only. And one of the things they prohibited was terms longer than 30 years. So on QM mortgages right now, you can't have a 40-year mortgage and you cannot have a 50-year mortgage. So in order for this to take shape, right? Let me stop sharing. In order for this to happen, y'all, in order for this to happen, they will have to change the law. They will have to change the law. Or non-QM lenders, everybody type in chat non-QM. Non-QM basically means that these loans cannot be sold back to Fannie Mae, Freddie Mac, Ginnie Mae, which buys FHA. So when you think of non-QM guys, I want you to think like bank statement loans, P&L loans, DSCR loans, interest only loans, light doc loans, right? All these different type of loans are go and fall under that non-QM category. So everybody type in chat non-QM. Everybody type in chat non-QM. And I want you guys to have a clear understanding of this distinction between what's a qualified mortgage and what's a non-QM mortgage. QM versus non-QM. Are y'all tracking? Are y'all tracking what I'm putting down tonight? Okay. Are you learning something? So I say all this to say, all this to say, and this is a good point right here. Chris Brown, UAE, you are on the money. You gotta follow the money, ladies and gentlemen. It's a bigger picture to all of this. It's a bigger picture to all of this, and you gotta know what you're looking at. See, a lot of you see when I'm reading a lot of you guys' comments, I look at a lot of emotional type of comments that you guys make, and I understand it, right? Because your emotions are tied into these things. But you got to start changing your perspective and your thought pattern of what we're looking at. You gotta look at the information, analyze it, and then you got to say, how can I benefit off of this? Now, there's going to be millions of people, unfortunately, that are going. If this comes into law, there's going to be millions of people that's probably going to say, "Hey, I'm gonna go ahead and do this 50-year mortgage because it makes both sense for me, and I think it's a smart solution and it works for me and my family." Okay, great. Now, how do I capitalize on that, right? If I'm an investor and I have properties to sell, whether it's fix and flips, whether it's new construction, guess what we're going to offer? 50-year mortgages. You know what I'm saying? Because if it's a demand for it and the people want it, guess what? Here you go. You can have it. You can have it. So you have to figure out, how do you make money in this too? Also, do you invest into the stock of a Fannie and Freddie if and when it goes public? Do you make money that way as well? How could this potentially impact Fannie and Freddie's bottom line of revenue and stock price potentially? So, ladies and gentlemen, everybody type in chat, follow the money. Follow the money. If you are a current homeowner and this is going to bring more buyers to the market, what is that going to do for appreciation in your house? Right? Is that going to help you? Is that going to raise our net worth because homes will go up more? Because there's more buyers that can qualify in the market? Now, I'm not saying this is not going to be for everything. Everything's not for everybody. At the end of the day, everything is not for everybody at the end of the day. So ultimately, follow the money. Figure out what works for you. Figure out what's best for you and your family. If you are a real estate professional, make sure you educating your people who come through the door and say, yo, I want to get a 50-year. I want to get this. So if you're a licensed realtor, licensed loan officer, and you having this type of dialogue with your clientele, make sure you give them the good, the bad, and the ugly. Right? And make sure you teach them how to capitalize if they are going to go into this. Hey, you have to that savings, maybe you need to throw it in the stock market. Maybe you need to do something to where it can make some money. So now you can what? Beat the interest trap and aggressively pay down your debt. So follow the money, ladies and gentlemen. Follow the money. Type it in chat. Follow the money. Follow the money. I wonder what the early payoff penalty would be on those, if any. I doubt there's going to be any prepayment penalties on these loans at all because there's not prepayment penalties offered now. So it's not going to happen. Non QM, yeah, some prepayment penalties, but QM, no, not at all. Not at all. So that's my Saturday, right? Oh, while I got your attention, I really think people need to start looking into the 20-year mortgage right now. Everybody type in chat 20-year. 20-year. Everybody type in chat 20-year mortgage. So let me tell you something. I want to show you guys. I'm gonna bring back up that rate comparison again, right? I like me personally. Where's my screen? Let me share my screen. Now, this might not be for everybody here, but I need everybody type in chat 20-year mortgage. 20-year mortgage. Now, on the screen right here, guys, you're seeing same scenario. Same scenario. We have, let me go to the previous. We have a $400,000 loan amount, 30-year term versus 20-year term, 6.5% on a 30-year, 6.25. Now, obviously, interest rates are subject to your personal situation. This is just for educational purposes only. This does not mean you're going to get this interest rate. Okay, let's be clear. Disclaimer, disclaimer, disclaimer. Type in chat disclaimer. Okay. But let's just say 20 years around 6.25, which give or take credit score, property type, et cetera, it's usually about a 0.25% lower. But payment wise, you're going to pay a little bit more on that 20 year. I ain't going to hold you. But for those of you who can't afford that higher payment, you should really look at that 20-year mortgage, right? Because you'll pay about $396 more on a monthly basis, but you can see you're saving over $200,000 in interest, right? So if you do 396 times 120 months or 120, you're going to pay an extra $47,520 monthly compared to the 30-year, but you're going to wind up saving $210,000. So let's do that minus 210. So you're going to have a net savings. Oh, no. Fucking calculator. I hate when it does that shit. So you got 210. What was that number I said, y'all? Let me do this from the beginning. 369, I think I said. Let me do this from the beginning. My calculator just conked out on me. Y'all do the math in the comments and type them in the comments too. So that's 396 times 120. That's 10 years. That's 47,250. Take that away from the 210 over that 10 years. So, God damn it. Why does it keep doing this? Late night struggles, y'all. 162.5 net. 162.5 net by going to a 20-year mortgage. So for me, for those of you, like I said, if you can afford the higher on a 20-year, and this is a home that you plan on staying in and you want to pay it off, then you can do a 20-year mortgage. Now, So Ackline says, I would not advise a 20-year at all. Well, good thing I'm the one who's doing the advising right now. Because I would advise a 20-year all day long if somebody can afford it. Right? Me personally, if you can afford the 20-year and you plan on staying in this house and you want to pay it off and you want to pay less interest, then why not? And I mean that in the most respectful way. Everybody can give their own opinion. She said, read her comment above. It's a lot of comments here. I only saw that one. Okay. Let me see. I see you said, but if you get the 50 or the 30 year and make an extra principal payment, it will cut your total loan payment over time. Yeah, but that's not going to, the 50 year making an extra payment is not going to do much. I'm trying to see. I don't see if you said anything else about the 20 year. But again, this all depends on what you can afford at the end of the day. Different strokes for different folks, ladies and gentlemen. Different strokes for different folks. Everybody has their own opinions of what you should do and what you shouldn't do. Mine's included. You don't have to listen to my opinion. I'm just the one who has the microphone right now, and I have your attention. So I'm going to be giving you my opinions, but you don't have to take my opinion, right? You don't have to take nobody's opinions in the comments as well. We are all adults here, right? We are all grown as adults, capable of making our own decisions of what makes both sense and aligns with our goals for our families, respectfully, right? So, whatever works for you, you have to do for you. And I am a fan of paying extra towards the principal balance as well. Um, I am a big fan. And for years, I've told people, hey, if you can't afford that 20-year, you know, what you can also do is make sure you take that principal and interest payment. So, and just cut that down and make that extra payment, or you take your tax return, your tax refund that you get, and you make sure you just put that all towards your principal balance as well. And you can shave off a lot of years on your payment, right? So there's many different strategies, there's many different things that you can do to beat the interest trap. You don't have to stay in any mortgage term that you get, ladies and gentlemen. So whether it's a 30-year, it's a 20-year, it's a 15-year, you can pay down your debt as aggressive as you choose to. The bottom line is a lot of you get caught up in, oh my God, home ownership is so ghetto because I paid triple for my house. You ain't staying in the loan for that many years, man. You got to learn how to maneuver through the system and pay it down aggressively. And if you got the money, then just buy it or cash then. What are we talking about? But I wouldn't advise that either. Some people will advise it, right? Different strokes for different folks. Whatever works for you. Okay. Are y'all following me? Y'all tracking, man? Shout out to everybody on the IG, man. Tapping in. Shout out to Facebook too, man. Shout out to my Facebook family. Okay. Any questions before I wrap this shit up? Because I've been on here 30 minutes and I'm about to go play with Mila. Okay. So, any questions, any concerns? Tell me what you got going on. Now, MG, what dollar amount would you recommend putting towards your principal balance? This was D Buckets 21 on Instagram question. Shout out to you. So, what dollar amount would I recommend? I recommend the dollar amount you can afford. Whatever it is you can afford, right? And shout out to you, Soul Akalon. Appreciate your insights on the check-in. Shout out to the chat. Keep chatting away. But whatever dollar amount you can afford to pay down on your principal balance, you have to now. Let me say this. I'm so happy we're having this conversation on Saturday night. Shout out to all of y'all. We got almost 300 people over here watching this Saturday night live. Shout out to all of y'all. Let me tell you something. Before you start paying down aggressively on your principal balance, you need to check some more math. You need to look at what does it look like. Let's just say you're going to pay an extra $250 a month, right? What does that $250 look like if I was to put that into stocks? Can I make more money with paying down $250 a month, or can I make more money by putting this into the stock market? So you got to look at from both perspectives, right? What is going to work best for you and your family? Should you, instead of aggressively paying down your principal, maybe you moderately pay down your principal balance and you moderately invest into the stock market? So that way, as you pay down principal balance, your equity rises, your net worth rises too. But as you buy into stocks and you watching these wonderful programs that we have access to, right? And you're learning everything about it. Now you can sit here now, invest into the stock market and build up your net worth that way too. So your money is working two ways for you. So you have to look at this, guys. Ladies and gentlemen, you have to look at this from all angles when it comes to mortgage debt, paying down your house, and investing into the stock market. You got to look at both sides of the fence. You feel what I'm saying, y'all? Y'all tracking what I'm talking about here tonight, man? Type in chat yes if you understand what I'm saying. Type in chat if you are picking up what I'm putting down. So, bottom line is the 50-year mortgage, smart solution, or lifetime debt trap. I say it's on whatever works for you. It could be a smart solution for some, it could be a lifetime debt trap for many. Right? And LaRon Jones says, laughing out loud, MG is thirsty for interactions tonight. No, I'm not thirsty for anything. I just want you and everyone else who's watching this to be paying attention. So sometimes you got to make sure people are paying attention by telling them to respond. This is Speaker 101. So, so Alkaline said, I swear people be hating, laughing out loud, and that dude is in your live laughing out loud. Yeah. If you're gonna be here, learn something, right? Learn when I'm doing things like this. Okay, so MG, great point. But I did ask if when you say stay in your home is 5 years or more. Um, I think you should again, if you staying in your house 5 years or more and you want to pay down your principal balance, then pay it down. If you plan on flipping the house in a couple years, 2 years, it might not make sense for you to pay down your principal balance, right? So you have to, again, right? You have to determine what works for you. Again, and this is why I brought the stock market into this conversation. I'm bringing the stock market into the conversation because this is also a vehicle to increase our net worth, right? Everybody's goal should be to break generational curses. Everybody type in chat generational curses. Everybody type in chat generational curses. And yes, I'm thirsty for your engagement right now. Yeah, I wish I had a drum or something, but boom, right? If we are going to break generational curses that myself and probably many of you who are watching this come from, we have to do things differently than what our people did when we was coming up. our parents, our aunties and uncles, and a lot of people who made a lot of mistakes. And I don't know about you guys. I don't want these mistakes for my children, right? So generational curses is what I have broken in my family, and I hope you guys have done the same. And I hope that you guys make the right sound decisions to continue to break these curses and continue to educate your children and the people that is coming behind you and your family to keep your bloodline growing, that you're diversifying the money that you're working hard to make. So that way, when it's time to pass these things on, we passing off wealth and we're not passing off, you know, rent stabilized apartments and food stamps and things of that nature. We're not passing off generational trauma. We're passing off discipline, great habits, investors mindsets, CEO mindsets. We're teaching our people and our children how not to make emotional decisions. You know what I'm saying? These are the things that we, everybody who's watching this live, it's Saturday night. Y'all could be anywhere, but over 300 of y'all watching me live right now. We got to make sure that we are doing what we got to do to the highest and best use of our abilities to continue to break those generational curses in our families and make smart decisions. So that's why this 50-year mortgage is a great conversation to have, because it's obviously it's trending. But a lot of people, if this comes into place, there's going to be a lot of people that's going to take this because they think it's going to be cheaper for them. And unfortunately, there's going to be a lot of salespeople in my world that's going to push, because if I know anything about this industry, when it's something new and shiny that comes on the market, they're going to want to sell it. They're going to want us to promote it. So they're going to pay us. And we're probably going to make a little bit more money selling products like this. So there's going to be a lot of salespeople that's just going to look at the money and try to sell people on taking out something like this that might not be beneficial for them. So the more you learn, ladies and gentlemen, the more you earn. And if the more you learn and the more education that you have, you can't be bamboozled. You can't be hoodwinked. You can't be fleeced. The wool cannot be pulled over your eyes. You can't say, well, I didn't know what I was getting myself into. Like so many people during the Great Recession and the last crash, that's all they had to say. That was their excuse. Everybody blamed it on Wall Street, blamed it on the bankers, blamed it on the appraisers, but nobody took accountability for themselves. We ain't gonna have that. Not if you are watching me. I'm gonna tell you what the hell it is and what's really going on. Because we have a responsibility to break generational curses, because the trauma that a lot of us grew up with, we don't want to pass that down. We can't pass that down. It's our duty to break that cycle. So being informed about the decisions that we make is extremely important. And this is why I'm telling you guys, diversify your money. Don't be just so quick to pay off your mortgage just because it sounds good and I want to be debt free. Look at how could that money make money for you too at the same time, because you can be moderate. You can pay it off moderately. You don't have to be super aggressive. So many people I know just be so aggressive with paying down it. I want to pay off this mortgage. I want to pay it off. And you putting all your money into it, but you ain't investing shit into other areas. Please don't do that. Please don't do that. All right. So Dion Speaks says, you think rates will trend lower if this is introduced or skyrocket? Not sure if you mentioned it yet. So I don't think this has absolutely nothing to do with interest rates. Right? This has absolutely nothing to do with interest rates. We got to watch the 10-year treasury for that. Do I think it was skyrocket? Honestly, I don't know. I don't know and I don't care. Like me personally, I don't know and I don't care. I just say that. I don't know and I don't care because if rates go up, they go up. If rates go down, they go down. Opportunities and everything. There's opportunities in recessions. There's there's opportunities in bull and bear markets. I was having this conversation the other day. There are opportunity in bull and bear markets. You just gotta learn how to maneuver through them, right? But I've been consistent in telling you all I think home prices are going to continue to go up, which they have. Nationwide home prices are up year over year. Now, they have in a lot of areas, definitely price cuts are there and shit like that. There are definitely going to be some areas that might be in trouble in a couple years. But overall, corrections are part of the business, y'all. As long as it's not negatively, if year over year stats doesn't show that homes are declining, correction, when prices are coming down, it's a correction. Right now, it's been a correction in the market, which we needed. It can't go up to 20% no more, but if they're going up 3 to 5% annually, guess what? It's appreciation. I'll take it. I will take it. Make sense, y'all? Okay. So we've been on this for 45 minutes. If you got value from today's impromptu, last minute live, type some gems in the comments. Also, again, subscribe to Rant to Gems on all podcasts, audio outlets. Download it, leave a review. I'll be back here Monday, 11 a.m. Eastern Standard Time. I got some more stuff I'm talking about on Monday too. Monday's gonna be good. I got some shit to talk about. Monday, Wednesday, Friday, 11 a.m. Monday, Wednesday, Friday, 11 a.m. Catch me on the airwaves. Okay. And anytime something like this comes up that I just say, you know what, I'm not waiting. I'm just gonna go live now. Catch me here. Hit that bell for notifications, y'all. Okay. Appreciate all the gems that I'm seeing in the comments. I appreciate all of that. And again, if you want to work with me and my team, if you want coaching, whatever it is, man, I got a coaching call package. I got it all. DM me on Instagram, MG the Mortgage Guy. Tell me you want to get pre-approved. Tell me you want to sign up for my 3 coaching program. Real estate never sleeps. She said, can you answer my question? Okay, let me scroll up. What's your question? Type it right now. There's too many comments. Type your question again, and I'll answer it before I sign off in here. And this better be a good question. This better be a good question, okay? Make it good. You understand? Shout out to my brother Andre Hatchett on the check-in. Shout out to my brother. Make sure y'all tap in with my guy Andre Hatchett, man. What do you think about transfer your primary home to your LLC? I didn't say nothing about no free coaching. Cut it out. I did not say that. Okay. It's gonna cost you $750 minimum. What do I think about transferring your home to your LLC? Why would you transfer your primary residence to your LLC? I don't know. Why would you do that? Makes no sense to me. Personally, I think if you're going to do anything, you should just put your primary home into a trust and do it that way instead of an LLC. That makes more sense than a LLC. And maybe we'll talk some trust. Maybe I bring my attorney up here and we can talk some trust maybe this week on the show. What y'all think? Y'all want to talk some trust? You know how to finance your properties and trust and setting up your trust type of episode this week. What y'all want, man? Let me know in the chat. All right, that's all I got. I'm ready to get the hell off of here. We've been on here for 50 minutes so far. Yeah, we got a lot of people like yes, trust. Yes, yes. Okay, we're gonna do some trust, some trust. Okay. Yeah. Everybody talking about yeah. Okay. Mm-hmm. Real estate never sleeps. Where is it? Let me see. Real estate never sleeps. Okay. Real estate never sleeps says, can I take a HELOC out on 100% paid off mobile home that I live in? It's currently a Class A neighborhood mobile park. Oh, you mean Class B neighborhood? Okay, that is a good question. That is a good question. Can you take out a HELOC? First of all, you got to find a bank that is willing to do HELOCs on mobile homes. That's number one. And if you can find that, I don't know any offhand, but if you can, then yes. But it'll probably be easier for you to do a cash out refinance than a mobile HELOC on a mobile home. And if you're late to the show, go to my YouTube, MG the Mortgage Guy, and check the live tab after this ends, and you can watch the replay. Okay. And you can watch the replay of this. So, all right, that's all I got. I'm done for the night. I've been on here for 52 minutes. I hope you guys got value from this. The 50-year mortgage, smart solution, or lifetime debt trap. A lot of y'all voted. Type in chat one more last time. What's your votes? Let's take the survey. The 50-year mortgage, is it a smart solution or a lifetime debt trap? Type it in chat. Smart solution if you agree with it. Lifetime debt trap, not death. Debt, DEBT trap. Type it in chat what you think it is. Sound off in the comments. Sound off, sound off, sound off. What do you think? I told y'all my opinion. Different strokes for different folks. If it don't make both sense and sense, then don't do it. Me personally, if it was an investment property, I will look at the numbers to see if going to a 50-year made the cash flow better. But if not, for my primary residence, 9 times out of 10, in the position in life that I'm in today and where I'm trying to be over the next 10 years, a 50-year definitely would not work for me personally. The numbers don't make both sense and sense. Okay. So type in chat what your opinion is. I would love to read your thoughts on this later. All right. Monday, like I said, 11 a.m. Eastern Standard Time. Tap in Rants and Gems and download us on all podcast audio outlets. All right. Appreciate y'all spending the last hour with me. Now go enjoy your Saturday night. All right. Matt Garland, NMLS number 58700, but I'm better known as MG the Mortgage Guy. Peace.